Now, deeper in debt, that is certainly our theme for today. As we've been reporting, it's a problem not only in states across the country, but also in the nation as a whole, and of course overseas in Greece and other economies. So who better to talk about the topic than Ed Yardeni? He's the economist who coined the term bond vigilantes in 1983. That's when bond investors really worried about excessive government spending. They bid up those U.S. Treasury yields. Well, here now to talk more about it is the president of Yardeni Investments, which provides investment advice to institutional clients around the world. I'm always wanting to jump quickly ahead to get to you. Let me ask you, with the backdrop that we have, whether it's the states here or the federal level, and then you also look at the sovereign debt problems overseas, I mean, the bond vigilantes, are they hard at work right now in your view?
I think they are. And interestingly, they're not working that hard here in the U.S., but they're working overtime in a place like Greece because that country has been borrowing too much. Its debt is growing too rapidly, and they really haven't been very straight with their numbers. So we put it all together, and that's where the bond vigilantes are right now.
Is it, though, anything like it was back when you actually coined the term originally? I mean, we saw interest rates then, of course, much higher.
Well, I coined it back in 1983. There was a lot of trepidation that inflation would come back as the economy started to recover, and I tried to reassure everybody that the bond market had become so large that the bond vigilantes would probably keep law and order if the Fed and the Treasury didn't do it. So, in fact, in the 80s, we had several backup in bond yields that slowed the economy down, and inflation did, in fact, go down. So the idea is they're regulating the economy.